Hello, penny pickers. My name is Dehan, and welcome back to your number one place for all your investing needs. So in today's video, we're obviously going to be going over some more penny stocks. So these are going to be 5 penny stocks to buy according to analysts, and price targets are up over 243% on some of these penny stocks. So this penny stock was rated by an analyst from Noble Financial, and the penny stock is going to be Gevo, so Gevo. So Gevo is a company as part of the emerging ESG and alternative energy stock trends we're seeing emerge. Both trend to go hand in hand. ESG, or environmental, social, and governance, focuses on companies that look to decrease their carbon footprint, creating a welcoming company environment and run operations ethically and efficiently, keeping in mind the communities surrounding operations. In this case, Gevo is building its foothold in the renewable chemical and biofuel segment of the energy industry. More recent attention has focused on the company's expanded upon one of its largest contracts. The company back then inked a deal with Trifigura Trading LLC, which sparked the initial momentum for the stock during the second half of the year. Offtake agreement brought Gevo's total offtake total to about 48 MGPY, collectively representing roughly 1.5 billion of the revenue across the life of its contracts. Jump ahead to December, which was a few days ago, and the latest milestone secures control of a 239-acre site to meet the conditions required by its contract at Trifigura. As 2021 begins, this is likely something to keep track of. Furthermore, analysts remain bullish on this stock. Just before the end of the year, Noble Financial boosted their target of Gevo stock to $5. The firm is also maintaining its outperforming rating on the stock. So let's take a quick look at this chart. So this stock, they gave it a rating of $5. This stock is already booming. I mean, if we take a look in the past year, here the stock was trading at 73 cents when the Rona started, now trading at $4.25. So the stock, has 5x, 6x pretty much in the past year. So right here, the stock started gaining momentum really in, December, kind of November area. In November, we see usually the volume is around 10 million shares per day. Well, right here, we see volume pop up, so volume was about 42 million shares right there. We even had over 100 million shares. The stock went from about $1 all the way here to highs of about, $2.87. So it made over 100% gain, 150% gain just in a few days. And then the stock obviously pulled back, and then we made new highs once again. So, volume started to pick up once again. The stock went from about $1.74 all the way to a high up here of about $5.15. So, made another 200% gain right there. So this stock is actually on fire right now, and I would keep a very close eye on it. As this analyst said, they have a price target of $5. So let's see what happens in 2021 with this one. If you guys are enjoying my penny stock content and you made it this far into the video, go ahead and smash that like button for me. Let's aim for 150 likes on this video. You guys smashed the previous goal of 100 likes in the previous video. Let's aim for 150. Can you guys do it? I challenge you guys. Also, we're so close to 11,000 subscribers, so go ahead and hit that subscribe button. Turn on that bell notification so you get notified every time I make a new video. I make videos on penny stocks, blue chip stocks, dividend investing, and all types of other investing content. The second penny stock we're going to be looking at is going to be by Citigroup. So analysts from Citigroup. The penny stock we're going to look at is going to be Lexicon Pharmaceuticals, ticker symbol LXRX. So some of the things that aided, Lexicon in the previous year is going to be the move from STEM from its phase 3 studies. So Solosis and SCORED both reached their primary endpoint targeting the treatment of the heart disease. As a result, Lexicon gained interest from the analyst community. Both Gabel & Co. and Citigroup upgraded the company to buy. Citigroup went further and raised its $2.10 price target to $6, putting a LXRX stock forecast at roughly 75% from New Year's Eve's closing price. Something else to take into account out of Lexington's closing update in 2020, the company commenced dosing patients in a phase 2 study of its LX9211 to treat post-herpetic neuralgia. Earlier last month, LX9211 received a fast-track designation from the FDA to treat diabetic peripheral neuropathic pain. In response to the most recent phase 2 initiation, Pravin Tile, Executive Vice President of Research and Development, said, "We believe LX9211 has the potential to offer a novel therapeutic approach to treating post-herpetic neuralgia." So if we take a look at this one, so this one right here, as we can see throughout the whole year, pretty much it was trading around this $1.80, $2 area. It was bouncing back and forth. So we consolidated, and then we broke out of that consolidation and actually trended on down all the way to about $1, and then we bounced off of that and started to make highs. So right here we had huge volume, over 100 million shares. The stock went from $1.20 all the way to about $2.38. Then we consolidated right here, and then another huge pop right there on 12/8/2020. Volume was over 200 million shares. The stock jumped from about $1.58 all the way to highs up here of about $4. So it made over 100% gain right there. And now we can see we're breaking out of that channel and continue to make new highs here after the pullback. And we're going to be hoping for volume to continue to pick up and more positive news throughout 2021, and for this one to continue to pop and break through that $4 and then hit the $4.50, $5 areas. Third penny stock was looked at by analysts at Mizuho, and it's going to be Syros Pharmaceuticals. So Syros has experienced a more mixed end to the year. However, during the second half of 2020, shares far outperformed compared to its first half. So since the beginning of the third quarter, shares stock managed to climb as much as 153%. This came as the company continued demonstrating meaningful progress on its pipelines. This type of bullishness has also been echoed by analysts from most recently. Mizuho reiterated its buy rating on the penny stock during the fourth quarter. It also has a price target of $14 per share. Xeris stock forecast price 184% higher than where it finished off the week. Something to keep in mind heading into the new year remains the company's pipeline, specifically its glucogen injection product for the treatment of the severe hypoglycemia in people with diabetes. In fact, Xeris just signed a distribution agreement with the company to commercialize Gvoke in Israel and the Palestine Authority. Gvoke will also be available in Israel prior to a registration on a named patient basis starting in early 2021. So furthermore, its recent win in the Euro, it brings its Oglu one step closer to commercialization. Xeris received a positive opinion from the European Medicine Agency Committee, and the CHMP recommended Oglu for the treatment of severe hypoglycemia in adults, adolescents, and children aged 2 years and over with diabetes mellitus. A final decision on the marketing authorization application for Ogluco in European Union is expected in the first quarter of 2021. If proven successful, the company could launch Ogluo in certain European countries in the second half of the year. So if we take a look at this stock, midterm and long term, this stock is very bullish. As we can see here, it popped up here all the way to about $5.50. Then we have this, huge jump back down and lost about 50% of its profits. And then throughout the year, continued to trend up, made it here highs of about $7 per share. Then we pulled back, and now we're trying to break out of that. But the thing we're seeing with this one is every time it breaks out, it makes new highs, and then the low is lower than the previous one. So here the low was $1.69, went all the way to about $5, $6. So we pulled back down to $2.68. Then we made a high here of, breaking out past that to $7, and then we made a low here of $4. So the lows are getting lower and the highs are getting higher, and right now we're breaking out of that low and continue to trend up. So what we're going to be looking forward to with this one in the next couple of months is going to see a breakout. We're hoping for a breakout to break through that $7 resistance. If we can pass through that $7, this stock will continue to go, just like the analyst said. The fourth penny stock was looked at H.C. Wainwright, and it's going to be CheckCap Ltd. So ticker symbol CHEK. So with CheckCap, most recently, trading momentum has really picked up. In fact, on December 31st, Check's stock saw its second highest trading volume of the year with more than 26 million shares traded by the closing bell. What's more is that this momentum continued well into the aftermarket session. Check reached extended hours with highs of 60 cents before finally setting out at around 55 cents. This was 20% higher than the 46 cents price it closed at during the regular session. Not only has the company received a favorable response thanks to a new lease on life from NASDAQ, but CheckCap could also have some other fundamental things to keep tabs on. First, last week, NASDAQ granted a 180-day extension to the company to regain compliance with the market operator's minimum bid price requirement. While this is favorable and prevents any delisting in the near term, CheckCap also has potential milestone to consider. The most recent of which was discussed in its November's business update. An investigational device exemption application was submitted to the FDA for a pivotal study of C-scan. This is the company's screening test to detect polyps before they may transform into colorectal cancer. Alex Oveda, Chief Executive Officer of CheckCap, said that the company's plans to provide a further investor update on the timelines for the initiation of the U.S. pivotal study expects in 2021 following guidelines from the FDA. In light of this, Analyst has grown more bullish. Right now, H.C. Wainwright has a buy on the company. It also placed a $1.50 price target, which is 226% higher than the closing price on last Thursday. So if we take a look at this one, analysts are even saying up here, short term, mid term, long term, very bullish on the stock. The stock was up 6% at the close. Now this one, just like the previous ones, this stock was trading around 50 cents per, pretty much for half of the year, and then we pulled back down. Down here, it built the support, and we're building a new support around this, 25, 30 cents area, and then we're trying to break out of it. But we can see here in the past month and a half, volume has picked up. So we're trading 10 million shares, 6 million shares, and then once again, right now, 15 million shares, and then, like they said, over 26 million shares on the previous days where we, hit the most shares that they've ever traded in a very, very long time. What we're going to be looking for this one is the volume to continue to pick up and more positive news to continue to follow this stock. And if we can break through that 75 cents area, this stock could definitely reach $1 once again and continue to run. And the fifth penny stock picked by analysts is going to be from B. Riley, and the penny stock is going to be Mustang Bio Inc. So this is going to be MBIO, ticker symbol. We've actually talked about this stock many, many times on my channel if you guys have been following my penny stock videos for the past year or a year and a half. So Mustang Bio also saw a stronger second half of 2020. Despite high volatility, weekly swings, shares of MBIO stock remained higher by the New Year's Eve compared to where they traded at the start of July. Furthermore, you'll notice that the second half of December was stronger as well. MBIO managed to claw back from an earlier sell-off, which took the stock from about $4 all the way to $2.55. This drop followed news that the presentation of interim phase 1-2 data of its lymphoma treatment MB-106. However, some significant insider buying along with the start of a new phase 1 trial seems to have corrected things a bit. Director Lindsay Rosenwald picked up 100,000 shares of MBIO stock as an average price of $2.66 mid-month. As far as its phase 1 trial, the focus is on the safety and the feasibility of administering MB-101 to patients with leptogeminal brain tumors. At the end of the day, analysts have remained very bullish on this penny stock. Towards the end of December, B. Riley reinstated Mustang with a buy rating. It also has a $13 price target on the stock. Considering MBIO closed last Thursday at $3.79, B. Riley's MBIO stock forecast price is 243% higher than the current trading levels. If we take a look at MBIO, it's actually been trading kind of in a pattern. So we can see here that it's trading between this $2.50 area and this, let's say, $4 area. So that's where we've been. So we've had about a, $1 up and down price movement in the past, pretty much year. Volume is pretty decent at around 1 million shares average per day. Analysts are short-term, mid-term, long-term, very bullish on this stock once again. And as we can see, we had this huge sell-off like we iterated in our previous clip. So right there, it went from about $4 all the way down here to about $2.50. And now we see volume is picking up. 18 million shares traded right there, 6 million shares, 4 million shares, and the stock has risen from about $2.70 all the way up here to about $4. Now, what we're going to be looking forward to is for this one to continue to trend up, continue to pick up some more volume and break through that $4.50 range. If it can do that, we can make some new highs and continue to trend on up throughout 2021. So guys, I hope you guys enjoyed these 5 penny stock picks that these analysts have picked and have, some huge price targets on some of these. There could be some serious gains made with these, but obviously, as always, I'm not a financial advisor, and this is just educational purposes. We're just looking at this article that analysts are saying that these potentially have some, good potential in the near future in 2021 and further on. So before investing into any type of stocks, make sure you talk to your financial advisor, make sure you do your own research, and make sure, you know what you're doing with these penny stocks. They can be very, very volatile and very, very dangerous. Now, if you guys are interested in trading, penny stocks, if you want to do some paper trading or any type of trading, go ahead and use my link in the description. Get your free stocks when you sign up with Webull. Also, we have Robinhood and M1 Finance links in the description as well. Get your free stock when you sign up with Robinhood as well. So guys, I hope you guys enjoyed this video. Like we said, go ahead and smash that like button for us. Click that subscribe button, turn on that bell notification, and I hope to see you guys in the next one. Goodbye.